5 minutes to go before the closing bell rings. Nuts. It doesn't look like, at least for you bulls, that we will see 7 in a row win streak for the S&P and the NASDAQ. Just 6. There you go. It's derailed. S&P down 27 points, NASDAQ down 88. Dow Jones Industrials down about 157 points. And we should look at the 10-year yield and the 30-year yield. We do have Treasury yields moving higher. The 10-year's at 4.49%, up just under 4 basis points. The 30-year's at 4.975. Earlier today, the high of the session, 4.999. So it didn't breach the 5%. But it's up about 7 basis points at the moment. So as yields move higher and stocks move lower, let's bring in a Wall Street whale. He's got $830 billion in assets under management. Steve Auth, Federated Hermes CIO. Steve, last time you were here was about the 3rd week in April, and you said the previous 2 weeks, when there was the most drama and the market was tanking, you were buying stocks, and then you stopped. What are you doing now?
We're right there. We're 50% max overweight equities. We're buying stocks as money comes in. We're holding our position right here. We've kept all through this, fortunately, it was easy enough to get whipsawed here, but we've kept our long-term targets. We've got 6,500 as our year-end target for this year, 7,000 for next. We've come through a dusty period. We're doing this whole thing about being strapped to the mast and hanging in there through a lot of volatility.
And there lashed were times, to the roof during the hurricane.
Yeah, exactly. There were times, Liz, when it was really getting pretty stormy, but we stuck to our knitting, and we like the market here. We think we're coming out of a pretty chaotic period. We've got a set of milestones we think are going to be achieved. That's the new wall of worry, if you will. I like little pullbacks like today. I think that's healthy.
This
a lot of stocks are still pretty cheap.
Yeah, okay. And yet, I just noticed, because I was looking, I said, oh my gosh, gold is up more than $65 in the aftermarket. So I can see how excited you are about that, because it doesn't have cash flow. Steve Auth is all about cash flow. But
no cash flow in gold, Liz.
No cash flow in gold. But what do you love right now?
We like defense and offense, but we've got more offense than defense in the portfolios now. So some of these tech stocks that are really beaten up, even though they've rallied off their lows, are still down 10, 15% off their highs. Google, you can buy that at 14 times right now. A lot of skepticism around search. We think that's really overdone. We would be buyers of that stock here. Amazon's another one that we really like. We liked it a month ago. It's been up about 20% since, but we still like it here. It's still cheap. About 20 times earnings, the way we run the numbers. So,
do you have a sort of a limit on PE ratios where you don't want to go any higher than, say, you tell me?
Not really, no. I mean, if we think the fundamentals are strong, we're okay with higher multiple stocks. But I have a tendency to want to buy a stock at a multiple that makes sense for the round of earnings growth we see in front of us.
There are some people watching right now and saying, did I miss that bottom? Is the worst, or at least some rocky road ahead of us still, where people could get in? Or do you think the worst is behind us?
Oh, yeah, the worst is definitely behind us. I mean, we saw that when Trump on the 9th switched horses back to Bassett. That was a telltale to us that he had figured out you can't go to like no trade. We got to go to like fair trade, reasonable trade, try to get better deals around the world. That's the framework we're in. So the existential risk that took us all the way down to 5,000 briefly, that's behind us.
Well, August 10th, we just talked to Rick Caruso, and we talked to Gene Soroka in the LA ports. I mean, we know that the Chinese tariffs could sunset, certainly, August 10th. You don't think that there would be a big problem if they haven't struck a deal? He
knows he can't go back there.
You think?
I think we figured out that doesn't work.
One last question. The Fed. The Fed right now is probably not going to raise rates until at least September. Does that weigh into your stock picking at all?
No, and I actually don't listen to what the Fed says. They've been terrible forecasters of what they're going to do. I look at more where things are heading. We think the inflation rate's heading down for 2.5%. In fact, it's running there about now. The tariff impact on our numbers is less than 1%, one-off. We think inflation's heading lower. Rates are coming down, not up. They might go up a little more in the near term, but we've got them going to 3.
Steve Auth of Federated Hermes. Always great to have you, my friend. That is going to do it for us.